Hey everyone, and welcome back to your Money Your Life podcast. What episode are we on today? We are actually on, as we look and research for it, we are actually on episode 317 of the pod. Make sure wherever you're listening, you like, subscribe, 5-star rate, and review this podcast because we do this every week. Let's get into it this week. The first thing we always try to start with is a little bit of history, a little bit of understanding of the markets. So let's jump right into what's going on in the markets. A little bit of a comeback for stocks in general. So the volatility is still occurring, but what you're seeing is earnings are coming out for tech, different things for roughly Q4 for some different companies, and we'll go through some of their earnings for their fiscal quarters, most recent ended. And so if you look at the 1 month chart, we're still up about, 0.5%, a little bit close to 0.5%. Year to date, we are now positive again, a little bit over 1%. 1 year over 16%. So again, we're seeing that volatility over the last month or so, and to really pretty much to start the new year, a little bit more volatility, but that has still subsided. Right now, we're in that positive territory, right? So nothing too crazy. There's different stocks that are dropping, single name stocks that are dropping on some different AI announcements. You're seeing so much movement when it comes to like AI announcements that they're, hey, this our tool is now able, our agent and our AI tool and large language model is able to do something that this SaaS has built for years, and a platform that's been built for years, it's able to do it in seconds. And so you're seeing some different companies drop on that news that are not as insulated, at least that the market or investors think right now, to what AI is doing. So that's a big theme in the watch in the market. If you're just someone that's buying these growth SaaS and that's like not an established big tech AI company like your Googles, Amazons, Apples, Nvidia, you're buying these more obscure companies that we used to think were stalwarts or at least were very viable, but now they're becoming potentially obscure with what AI is able to do. That's something to watch out for, right? So let's actually move over to um, understanding a little bit more about what's going on in the market, and what is changing. So Nvidia did release earnings. We'll talk a little bit more of that in a little bit. Again, the S&P 500 closed higher yesterday. If you're listening today, which would be Thursday when we release this one, software and tech names did bounce back in that session on Wednesday. The Magnificent Seven tech giants closed in the green. Microsoft, which has been a lagger, gained about 3% yesterday. The sentiment has been fragile in software and cybersecurity tools this year, as worries remain about the rapidly developing capabilities of AI products, as I was just explaining, that could interfere with incumbent software vendor businesses. So pretty much they're saying like AI products are able to do some of the things that these big, large companies that have $1 billion in market capitalization and built their names off these platforms that do these big software as a service businesses are now at the whim of an AI agent, Claude, an AI agent, OpenClaw, ChatGPT, all these different things that can just do what they were supposed to be doing in seconds. So when you look at software now, the earnings revisions on 1 or 2 of the year basis are positive. So this isn't, so they're saying this wealth management person is saying it's not going to happen to software earnings in the next 1 to 2 years, saying, hey, it's going to be a little while, which maybe, yeah, but the market's pricing in, okay, what is the factor? What happens to some of these companies? And what do we do about it? The market is pricing this in. And so you're seeing that occur. Initial unemployment claims did edge higher last week, but stayed within a historical range, suggesting that employers are continuing to hold off on layoffs even amid weak hiring. This is from the Labor Department. And the first time filings for benefits totaled a seasonally adjusted 212,000 for the week ended February 21st. That's up 4,000 from the previous week. So U.S. trade partners are uncertain deals are safe for Supreme Court tariff ruling. So again, if you remember the Supreme Court did rule on striking down the emergency tariffs, and then the administration used another law to enact even more tariffs. There was, I think, FedEx that sued the administration asking for their money back, but like, hey, we paid this tariff costs, but the Supreme Court just ruled that it is not legal. And so we want our money back. That's what we talked about in that episode. I think it was a week ago, where we're saying, are the money going to be given back? So that's actually still murky. Someone sued. There was another company or state, or there's another company that sued as well. Um, and this is still murky because almost immediately after the Supreme Court ruled, the president did put in place a 10% tariff under Section 122 of the Trade Act of 1974. And he also threatened to increase it to 15% tariffs under Section 122, but it's unclear when they would take effect. So again, you're seeing a lot of murkiness in that trade war. But again, the market's kind of just brushing off like, hey, this is not viable right now. And so that's one thing to know. Let's jump into Nvidia earnings. Nvidia did release earnings yesterday, Wednesday night. They had massive results, but investors are still a little bit skeptical. It looks like um, the world's largest chip maker, and probably the world's largest company by market cap, combined mammoth revenues with a forecast for accelerating growth on Wednesday, but the company stock stayed mostly flat over concerns that it's benefiting from an unsustainable bubble. The CEO disputed those assertions on earnings call, noting that companies are profiting from their investments. And he's confident in cash flows growing. Um, and so again, Nvidia stock was up slightly in pre-market trading. Let's actually take a look at the chart now, see what the world's largest company is doing before the market opens. Um, and it's up slightly. You're seeing about 0.69% yesterday. So yeah, it's still up. And year to date, again, it's having a good year. This is still a stock that's performing really well, benefiting from the AI trade. Revenues for the fiscal fourth quarter hit 68.13 billion, which beat analyst estimates, and total revenue climbed 73% from the figure Nvidia reported a year ago. So they're just boom going like gangbusters. That's why the stock has gone crazy. They're going like gangbusters. Now they're growing, and there's unsatiable demand for AI chips right now because they need the computing power because more and more people are going to be using AI. You see what it's doing, able to power and able to do, and how efficient it is toppling potentially some bigger companies. And so that's a big, big thing that we'll have to keep our eye on. Another big company is Salesforce. They released earnings, and they had a tepid revenue forecast. And investors are wary of AI disruption in the software sector as artificial intelligence tools pose a challenge to Salesforce customer offers. So Salesforce is a behemoth that people are saying, hey, is this even needed? Do we need Salesforce? Or could we just build an agent that does this for us within an AI model? Um, so that's pretty interesting. Like, so these companies have to either play nice with AI, partner, integrate, or figure out a way to be better, build something of their own. This is going to be a really, really huge play for a lot of companies. So that's something crucial to understand. JP Morgan Chase hikes their 2026 tech budget by almost 2 billion. So they're going to spend on technology and AI. They had a plan to spend 19.8 in 2026, a rise of about 10% compared to last year. While most nearly the 2 billion increase is due to investments, part of it is caused by inflation, which is driving up hardware costs. The news comes as rival financial firm boosts their AI expenditures. So everyone is boosting their AI expenditures. The JPM's like, oh shoot, we got to do the same thing. We're going to put an extra 2 billion into AI. 20 billion they're going to spend on technology annually. This is so interesting. So, are they going to be buying companies? Are they going to be putting in AI tools, chatbots? Are they going to lower headcount and just invest in more efficient tools? That's something to be seen. A lot of people are talking about what Claude released and different things where it's pretty much mimicking what an analyst at an investment bank, private equity firm, venture capital firm would do. They're mimicking it within freaking seconds by prompting in one of Claude's new updates. So people are wondering what happens to investment banking analysts or junior roles or associate roles headcount. That's really, really crucial. So that's another thing that's going to be talked about heavily, folks, heavily is what is happening with AI and how that's pushing different companies. And so as a sole proprietor, someone that's on your own, figuring out how to use these tools to make you more efficient is probably your main thing right now, messing around with them. I think for me, I've like built a couple of dashboards that I think were really helpful, and I'll continue to mess out around with different tools. I've now pretty much using three AI tools and chatbots consistently, and we'll look to see which ones are better than others. Some are better at qualitative stuff, some are better at quantitative, some are better technical. So it's just a good game of finding out. And they're always updating, so some new version will surpass another version of themselves, of also maybe of a competitor, right? And so this is such an interesting game, and you have to just kind of stay keen and aware to it because a lot of things are happening so quickly. So we'll keep an eye on it, folks. That's really the big thing. Actually, one more story I do want to touch on. Warner Bros. And Paramount Netflix. This is getting crazy. So Warner Bros. Discovery said on Thursday they reported a 6% decline in revenue for its fourth quarter. Oh, that's actually not great. 6% decline in revenue for its fourth quarter to 9.46 billion. That's a smaller dip than Wall Street had expected. The company has just a few weeks left to decide whether they'll accept the takeover bid from Paramount Skydance or Netflix. So again, Paramount Skydance increased their bid um, for Warner Bros. Discovery, and they're trying to beat Netflix to buy this platform. Um, and so we'll see. I think Netflix will ultimately win out, but it's a contentious battle. It's a contentious battle to win this platform and those assets of Warner Bros. Discovery. But we'll keep our eye on that. Let's get into the question of the week. The question of the week. Why don't we? The question of the week is a quick one, a fun one. How many math errors did taxpayers make on tax returns last year? How many math errors? I don't know. So is it asking like literally how many individual math errors or like the conglomerate uh, actual end of the amount of the errors? I would say a bunch. 20 million? I don't know. No, that's too much. 5 million? Oh, 1.25 million errors. There was 1.25 million errors. Yeah, that's not bad. That's not as much as I expect. I mean, it's a annoying. If a lot of people are doing themselves, I'm sure there's a lot of errors, or just in general, it's just like a cumbersome thing to fill out. It can be complex, and so that's where you get those errors. Folks, you'll get a good version of the Your Money Life podcast next week when I'm on vacation, where we're talking about probably a financial concept that will be good for you guys to learn. Remember, we do this every week, so stay tuned, pass it along to family and friends. Stay tapped into the social media as well. We'll see you next week.